Before you invest a single dollar, understand this. The market doesn't destroy investors, emotions do. Fear makes you sell at the bottom, greed makes you hold at the top. And if you cannot control those two forces, you will never build real wealth, no matter how smart you think you are. Good morning, wealth builders. This is Ravi Gabis, and welcome back to the Gabis Show, where we unlock the secrets of real wealth in the United States every single day. Today, we go deeper into investments. Without investments, it's nearly impossible to become rich. Saving alone will never make you wealthy. If you want $1 million and you save $1,000 a month, it will take you almost 100 years. Nobody has 100 years. That's why we use the abundance strategy. You earn money, you spend wisely, you invest, and you invest what remains, and you multiply capital. That's where the miracle happens. But here's the problem. The biggest obstacle in investing is not knowledge, it's emotional intelligence. When you enter investments, your sympathetic nervous system activates the survival system. It says, danger, you can lose money. That's fear. Then, when markets go up, the other force activates greed. Greed says, don't sell, it will go even higher. You're a genius. Fear and greed, these two emotions destroy more capital than bad strategies ever could. Let's look at real numbers. In 1987, during Black Monday, Coca-Cola stock dropped sharply more than 20% in a single day and nearly 30% shortly after. Panic everywhere. According to public financial data, Warren Buffett invested about $1 billion into Coca-Cola around that period. Over the following decades, that position grew more than 16 times, not even counting the billions he received in dividends. More than 16x. That's emotional control. Now, 2008, Apple stock dropped about 50% during the financial crisis. People said luxury electronics were finished, that no one would buy expensive iPhones or MacBooks during a recession. But according to historical market data from the 2008's lows, Apple later increased more than 14 times during the following growth cycle. More than 14x, but only for those who didn't panic. In 2000, the dot-com crash, Amazon stock collapsed by about 95%. 95% down. Most people believe the internet was a bubble and e-commerce was dead. At that time, Amazon's market capitalization fell roughly $6-7 billion. Today, Amazon's market capitalization fluctuates around 1.5 to $2 trillion depending on market conditions. That is more than 200-fold increase from the crash lows. 200 times. And the only difference between those who made money and those who didn't, fear, greed, control. That's why emotional intelligence is not some soft psychological concept. It's a financial weapon. If you cannot observe your fear, if you sell at the bottom, if you cannot observe your greed, you will hold until collapse. The third system is rational brain. Your thinking brain must control the emotional brain. That is how wealth is built. By the way, if you want to understand how investments connect with business strategy and capital growth, my book, Business from Scratch Up to Millions, is linked in the description. And there's also a free webinar link where I explain how to move from business income to real capital accumulation. If you're serious about building wealth correctly, subscribe now. This channel is a daily business and finance university. If you miss one episode, you miss part of the system. Tomorrow, we go even deeper into investment mechanics and capital returns. See you tomorrow.